All right, welcome back for another episode of Carnivore Trade. Today is Thursday, September 15th, 2022. Not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, so obviously getting the video out later than usual today. I've been having some work done on the house, and it's been a little bit more of a project than it originally was intended to be, but so I've been busy all afternoon now. I've got a lot of messages from everybody, and not ignoring everybody. It's just been a busy day here. But anyways, we're looking at the ES futures today. So down 60 basis points here in the after hours. A little bit of a dip there, as you can see, and we're kind of just consolidating that move. A lot of that having to do with FedEx getting roasted here. So down at 170 handle, they reported that they're lowering guidance. You can see you have a little bit of a support level there at 160. This has been a kind of a downtrend really since mid last year, and that is trading at that 170 handle currently. So you'll have some support there around 160, and then after that, it's really down to about 150. You got that gap and 200-month moving average there, and Adobe as well, also kind of dragging the market down a little bit today. So that took a huge hit. They announced a buyout with earnings, and obviously market not liking that, so getting hit almost 17% there on the day. This has taken a 50% haircut in really the last 10 months. So yeah, 11.22 there that week. 10 months, it's over 50% haircut here. So pretty good sell off there for Adobe. Into the spiders here. So I want to just do a quick little video. I'm not going to get too much into it today, but I do want to get something out for you guys. It started off with just kind of a choppy day. It looked like it was going to be kind of an inside day, maybe a doji even. And we kind of just rolled over towards the final hour of the day. And we, managed to bounce up a little bit at the end there. But we did break this trend line. So now we are below that trend line. And if we close below today's low tomorrow, that would confirm that, and it would give you a weekly close below that. And if we close the week below this pivot here at 388.42, I'm going to say right now, I'd say that right now we're at a very heightened risk of a volatility event. And by that I mean, major like waterfall selling. And I don't say that often. I don't say that lightly. Obviously, if we do close below that pivot, 388.42, you're going to go right to 378 pretty quickly. There's a gap fill there, and you have the 7.5 retrace as well. We talked about that in the live stream the other night. But I think we're at a heightened risk here, a heightened period of risk for some serious downside action. Now, the one saving grace could be tomorrow is quad wedge OPEX. Maybe they prop it up for that. We are right into support there, and we said this a week ago. I said, look, we're not going to just go right through this level. You got to bounce up and put in a lower high first. That's exactly what we've done here. So we went up into this red bar, 618, and that pivot, and that got rejected hard. And now we're back down into this level here. So on the weekly, if we take a look here, we're basically, we have an engulfing candle going on in the weekly right now. That's not a good look. Not a good look for the bulls here. And really what I'm saying, why I'm saying we're at heightened risk for waterfall type selling is this, basically the cyclical patterns that I've been working on really all year. We're coming into that time where we can see an acceleration on the downside. So essentially just the cyclical nature of it, but that's not really good enough for me to just say something like that. But now I'm starting to see actual cracks here. And what I mean by that is the 2-year Treasury note yield. The 2-year Treasury is getting pummeled right now. It's at a 14-year low. Hasn't been, 15-year low. So hasn't been this low since 2007. And it's just getting absolutely bludgeoned. Another thing that I think we need to watch here is gold. This is kind of sounding, this could be kind of sounding an alarm bell here. That was a big dump today in gold. And you have new 52-week lows in place now. And it's below the 200-week moving average. And really, you got lows going back to, really 2020. So June 2020 was the last time you're this low. Typically what happens if the market, if there is a crash, I hate using that word because it's such a buzzword that everybody likes to use, but if there is something like that, a lot of the time gold will sell off very sharply first, and it's used to cover margin debt. and then it bottoms very quickly and it has a violent recovery and it bottoms before the market does. I think that is a possibility right now. Um, just seeing that with the 2-year yield, this is, when the bond market starts to freak out, that's usually kind of like the first shoe to drop. We're looking at flipped over here to the 5s and 30s. That is now negative by 20 bips. Like just in 3 days, it was barely positive. We're 20 bips down already. 2s and 10s are back above 40, so now 43 bips negative. 3-month and 10-year is still kind of putting in this bear flag pattern here on the weekly, and that got rejected at that 50 moving average on the daily. So, the trend is down here. And if we look at 10s and 30s, excuse me, that's 5 and 30 again. 10s and 30s are only positive by 2 bips. So they're very close to inversion as well. Bond market's flashing warning signs, and I believe gold is starting to flash a warning sign. So definitely, I'm in a cautious mode here. It's not really a secret here that I'm net short. I basically kind of telegraphed that to you guys here every day. So I'm in a comfortable position right now, but I just want to pass that along because I do think if we lose that pivot tomorrow, no doubt in my mind we get to 378 pretty quickly, but it could overshoot that. And we also have, I'm going to flip over here. You could make a case you got a head and shoulder here as well. That triggers tomorrow. That would take you down. You're looking at 40 points there. So that's in play as well. By the way, speaking of head and shoulder patterns, we actually triggered one on Microsoft today. So your shoulder and head, and that triggered today. So that is in play. And obviously the second biggest company in the market. So just want to, kind of do a quick video here. I mean, I'm not going to go through all the sectors today just because it's kind of doing this video late. Semis got hit a little bit, obviously. A little bit of sympathy with IGV. That took a hit, off of, again, the same kind of thing with, Adobe, same sectors, tech. By the way, head and shoulder there on IGV, that's triggered today as well. So potential weakness here, just definitely kind of sounding... throwing some red flags at us. So look at the transports. Again, weak today. They're going to get pounded tomorrow off of FedEx. After hours, they are here down to 12 there. Yeah, oh, that's a split. Yeah, it's an after hours bid. We won't worry about that. Let's take a look at IYT. Yeah, IYT down 7 points here in the after hours. So FedEx is going to weigh down on this. We'll watch the transports tomorrow. And we noted, last week that it was the transports were weak. And that was problematic when oil, when crude was dumping, that it was kind of strange, like, hey, why are the transports not bidding more? But now taking out that pivot there, so transports weak, semis weak, cloud weak, Adobe taking that down. I don't like what the 2-year is doing here. Usually the bond market's the first one the first shoe to drop, and if the bond market freaks out and we start selling off rapidly, the stock market will freak out. We'll watch HYG as well. This one down a little bit in the after hours. This is taking a hit here. So again, watch the bond market, watch gold. Could be telling us something here. Again, most sectors here were negative. XLF was actually up a little bit today. I think maybe this was a little bit OPEX related. So Fins did do okay. Healthcare, was green, but definitely seeing some warning signs here. So I just want to pass that along here, get a quick video out. I'm not going to go through the usual routine today just because it's so late here, but I did want to get something out to you just because of that kind of price action that I saw here into the final hour, really. Like I would say 90% of the day, I would say I was not really, I wouldn't make much out of it, but that last hour here, that weakness there really kind of is, I thought pretty important to talk about, especially given the selling in gold and in the 2-year. So, anyways, guys, gonna wrap it up here. You guys take care. Talk to you tomorrow with a full video, and we'll take a look at those weekly closes. Anyways, guys, take care. See you all later.